You won't believe this. Jpmorgan is launching more crypto services. They will launch financing for crypto ETFs. At the same time, Jamie Dimon continues to spread FUD about the asset class. And California passes a huge Bitcoin bill. I'll give you the details. Let's get into it. Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, I want to let you all know about something that took place today, and it's along the lines of what I've been saying for a long time, and that is the United States Federal Reserve and the other central banks around the world will continue to print money because this is the fiat system. And this is why we have to position ourselves in assets to outpace the debasement and the inflation. So today, Donald Trump tweeted out he is in agreement with Elizabeth Warren to remove the debt ceiling. Look at what's happening here. Elizabeth Warren, of all people. But this is what I've been telling you guys, Democrats and Republicans, the one thing they agree on is to keep raising that debt ceiling and keep printing. And we've been tracking global liquidity, which is fed by the amount of money and liquidity that's pumped in by these central banks. And that has been on the rise, and Bitcoin and all the assets follow global liquidity. So I hope you are seeing what is taking place here. I hope this is eye-opening for you, because this goes against a lot of the political theater, the mudslinging we've seen. And I believe that is just to distract you from the fact that the Fed and these central banks are doing these things. And obviously the politicians are in bed with them to do this, right? So it just shows you that we need to make sure we keep our eyes on what we need to do from an investment standpoint to outpace this madness and generate wealth for ourselves, folks. And let me just read what Donald Trump posted on Truth Social. So he shared an image of Elizabeth Warren tweeting at him from, I think it was in May. She said, "Donald Trump and I agree the debt limit should be scrapped to prevent an economic catastrophe. Let's pass a bipartisan bill and get rid of it forever." Donald Trump today tweeted out a screenshot of that saying, "I am very pleased to announce that after all these years, I agree with Senator Elizabeth Warren on something. The debt limit should be entirely scrapped to prevent an economic catastrophe. It is too devastating to be put in the hands of political people that may want to use it despite the horrendous effect it could have on our country and indirectly even the world, yada, yada, yada." Folks, if they remove that debt ceiling, what do you think is going to happen? It's going to make it easier for them to print and print and print. We are going to continue to see the debt rise to new all-time highs, and so will asset prices, because the more you debase the currency, the less purchasing power the fiat currency has, but the prices of assets skyrocket. So that includes crypto, precious metals, the stock market, real estate, and much more. But as Paul Tudor Jones said in 2020, after they printed the most money in the history of the United States, he said, Bitcoin and crypto are the fastest horse in the race. So you want to position yourself in assets, and of course, crypto. If you want to get that bigger return, crypto is the big macro trade. Folks, look at what's happening here. Trump and Elizabeth Warren have mudslinged and called each other names. I'm talking nonstop heated battles, right? Trump usually calls her Pocahontas and so forth. But look at what they agree on, folks. I hope this is eye-opening for many of you. This is something I've been trying to get folks to understand and to not get caught up in the political theater and narratives. If you're caught up in that and you're worshiping politicians and much more, you're going to be disappointed, because the things they agree on, if you don't understand what the outcomes and what happens as a result of that to you and your money, then you're missing the mark. You are falling for the political theater. They don't care about the debt. It is all a facade. The fiat system requires that you keep printing. Now you could say, hey, we shouldn't be printing as much and we shouldn't be spending as much. Yes, that I agree with that. But at the end of the day, they have to keep printing, regardless of if Elon comes in and cuts $1 trillion. And obviously he wasn't able to do that. He was only able to cut like 175 billion, right? And he had to get out of the government. And he's actually criticizing Republicans and much more. You guys are going to spend more, blah, 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 blah. But this is the fiat system. Not even Elon can stop it, folks. And this is a setup that exists globally. And of course, Bitcoin and crypto are going to move against that. And this is why I keep tracking global liquidity, because assets are correlated to it. And like I said, what's feeding into the global liquidity number? The more money printing that they do. So please understand this, folks. It's foundational to investing, whether you're investing in stocks, real estate, much more. This is what's driving asset prices. Now, folks, on that note, we continue to see whales are accumulating. Here's data from Sentiment. Today, we saw a huge spike. So despite the volatility, some of the pullbacks for Bitcoin, wallets with 10 or more Bitcoin saw a massive spike. And I'm going to have Brian from Sentiment on later this week. We're going to break this down, but huge spike. We are still in a bull market. I know there's going to be people who don't believe that because they're caught up in their emotions, but the data doesn't lie. And folks, you won't believe this. Look at this news. Jpmorgan plans to offer its clients financing against crypto ETFs. So it's being reported by Bloomberg. Jpmorgan and company will allow trading and wealth management clients to use cryptocurrency linked assets as collateral for loans, starting with BlackRock's iShares Bitcoin Trust. Oh my gosh, I hope some of you took your positions, folks. The world's largest bank is doing this, and they're going to issue loans against ETFs and much more. And just remember what Jamie Dimon said a week ago. This man is the master of playing smoke and mirror games. He said the US should be stockpiling missiles, not Bitcoin. So he continued his FUDDing criticism. So while he, as the figurehead, the CEO, is saying these things for the masses, distracting them, telling them, oh, don't worry about it. His bank, the world's largest bank, is building all of these crypto services and products. Folks, this is the game. And I've talked about it for years. So please, please recognize what's happening here. It's important because this is the game they've been playing for a long time. And I'm trying to wake up some of you, like pull you out of the matrix, right? Like what happened with Neo in the Matrix, right? He gets unplugged and his eyes are open. I'm trying to help you to understand that this is how the markets and the economy works. And they don't teach us in school about the money printing and the Fed and much more. And obviously these big banks, JP Morgan and much more, they are plugged in to the Fed and the Treasury and much more, guys. So the bank will also consider clients' crypto holdings when assessing their overall net worth and liquid assets similar to stocks, cars, or art. Oh, so Jamie's recognizing the crypto asset class. It's a legit asset to them if they're going to recognize it as part of their client's portfolio. So the changes will apply to all of the bank's clients globally, spanning multiple levels of wealth, and come as big banks respond to client demand and a more favorable regulatory environment. Folks, we're still in the bull market. This asset class is on the rise. It's getting adopted by the largest institutions in the world. I've been telling you all, blockchain will be the rails that the governments, the economies, and the markets will run on. Be patient, understand the market cycles, follow the macro, things like global liquidity and much more. So great times are ahead, and not only for this cycle, but for future bull market cycles. And as I've told you guys, I am going to take some of my profits from this cycle, reinvest it in the bloody bear market of 2027, prepare for the 2028 to 2030 bull market. So that's my plan. And I'm going to ride this institutional wave of folks coming in. But Jamie Dimon is something else, isn't he? Playing that smoke and mirrors game, spreading lies and FUD while his bank is doing all these things, folks. Now, the folks at Bloomberg, Eric Balchunas and James Seyffert, gave a full breakdown of who is invested in Bitcoin ETFs as it relates to financial institutions. And it's very interesting. So Eric Balchunas said, nice look at the breakdown of holders of the spot Bitcoin ETFs via 13F filings. So this is confirmed by the 13F filings with the SEC. Advisor has surged up the list and now number one by a mile. These 13F filers make up 20% of total assets, but in my opinion, that is likely to rise to 35 to 40% as more adoption comes. So leading the number one spot as far as exposure is investment advisors, number two, hedge fund managers, number three, brokerage, number four, a holding company, number five, government, number six, bank, number seven, private equity, and then followed by trust and endowment. Folks, I hope you see what's happening here. This is a paradigm shift. And James Seyffert gave a breakdown of the Ethereum ETFs, and the top five are essentially investment advisors, hedge fund manager, brokerage, private equity, holding company, trust, and so forth. So, folks, you have some of the biggest institutions buying these ETFs. They want exposure, they want crypto. And I hope you have the macro outlook and that you bought the bloody bear market, you bought the lows, and we're going to get ready to take profits at the highs when things get greedy and euphoric. Now, folks, quick word from our sponsor, and that is Proppy. Proppy is leading the charge with putting real estate on chain. I invested in a Proppy token back in 2018 when I discovered Proppy, noticing that they were disrupting the real estate industry. So on their platform, you can buy and sell real estate using crypto. And of course, their platform is powered by blockchain. And they're a licensed Web3 pioneer. They've been around since 2017. They've facilitated over $4 billion in transactions. Folks, we know all assets are going in the blockchain, and the real estate market is the largest asset class, right? They're going to put all the real estate as much as possible in the blockchain. And the way we're going to buy and sell properties, it's going to be on blockchain power platforms like Proppy. So they use Coinbase to facilitate the crypto escrow service. They've put deeds and all kinds of stuff on chain. They put creative NFTs for houses and much more. So folks, if you'd like to learn more about Proppy, visit the link in the description. Now, folks, California has officially passed the right to transact Bitcoin unanimously out of the assembly. This is good. It's a bill that is, helping folks to be able to use Bitcoin, adopt Bitcoin, and much more. Now, it still has to make its way, going further into government, right? You got the House, Senate, and so forth, and then the governor has to sign it into law. But some folks initially were like, wait a minute, there's some language here that's a red flag, and that is people were reporting that Bitcoin held on exchanges for 3+ years will be transferred to the state of California under a law passed by the assembly. So right away, it's like, whoa. What the hell? This is why I'm a big believer in self-custody, because that can't happen if you own your own keys, right? So it's important that you don't leave all your crypto on an exchange, folks. We've said that for a long time. But Dennis Porter of the Satoshi Act Fund gave clarity. When they take the Bitcoin off the exchanges, they're not liquidating it. They are going to hold it, and you kind of like how the unclaimed property laws work, you can go claim it. So they're not liquidating it. They're not taking it and using it or anything like that. So that's good to know. So we got some clarity there that it's not what we were thinking, because on its face, it looked really bad. And I'm glad it's not, what we were thinking it was initially. So that's really good, folks. So I'm glad there was some clarity there. And folks, today we had a digital asset market structure hearing in Congress. So the House's version of the market structure bill, called the Clarity Act, was discussed. Really great. We got to have the dialogue. We got to have the discussions. And you had some folks testify much more. Congressman Tom Emmer came out supporting the Clarity Act. You had French Hill, of course, Brian Style, the folks I've had on the podcast talking about this. So we're making progress. So that's a very good sign. Now, Circle's IPO is set to be over 25 times oversubscribed. This is incredible. And it's kind of what we've been talking about. I think we mentioned it yesterday when Ripple CEO said, hey, we were not looking to buy Circle. And I think there was some fake news put out there, right? Circle, Coinbase, these people are trying to come buy us and stuff to try to get the valuation higher, right? I spoke about that. But what's interesting, Chamath Palihapitiya, who's a well-known investor, he's part of the All In podcast team. He said the following: it would be genius for Ripple or Coinbase to buy Circle. It looks like Circle's IPO is 25x oversubscribed, valuing the company at around $7 billion. If someone can buy it for even 12 to 13 billion, that's a steal, in my opinion, for what this business could be worth in 20 years. I agree with him. The stablecoin market's going to boom. And Circle has a very big lead in the United States specifically. Now, globally, it's Tether, right? But Circle, they got the first mover advantage. They have a lot of the infrastructure where USDC is on multiple blockchains. They have even exposure in Latin America and much more. So they're further ahead than any other competitor in the United States. So he says Circle has built the entire market structure for stablecoins well before it will formally exist in the United States. For example, ahead of the Genius bill. My prediction: Stripe, Square, Ripple, Coinbase, they're all going to end up competing with each other for stablecoin dominance, which is really good for end businesses and consumers and probably really bad for terminal margins. The company that builds the most efficient infrastructure and sells it for cheapest, cost plus, with a thin margin on top, will probably take the market. He says, note that there are no official/confirmed reports of Coinbase pursuing an acquisition of Circle, but there's a bunch of rumors in the rumor mill that they are in acquisition discussion. So once again, we've just heard a ton of rumors. Honestly, I think Coinbase would have the biggest chance of acquiring Circle because they've done a massive partnership with Circle in integrating USDC. So they already know how the product works. They've already got their foot in the door there, but you never know. Whoever comes with the highest bid. Ripple CEO, of course, denying, the rumors, but we'll see how it plays out. And Circle is still trying to do their IPO. So will an acquisition happen right before, they're trying to do an IPO? I don't know. We'll have to see how it pans out. But I agree with Chamath here. A lot of these folks got a lot of work to do to catch up to Tether. Tether is just massive, even with the complications in the EU market. And I'm going to try to get Tether's CEO on again, Paolo Ardoino, to talk about this. I'm going to try to get an in-person interview with him at my studio in New York to talk about all these things and, how are they going to be able to navigate the waters with the stablecoin bill here in the United States. So TBD on that. Now, folks, some good news. MoonPay was able to get a BIT license in New York. Now, I hate the BIT license. I think this is bullshit. They should get rid of it. It's a stupid wall they put up, and I think it was put up to slow down crypto companies, honestly, by the Wall Street guys. But nevertheless, it's great to see crypto companies get these licenses. And they sometimes have to wait years. It's so stupid. And that's why some of you ask, hey, why can't I access this company or this platform in New York? It's because New York has this bullshit license. But MoonPay joins a short list of crypto native firms, including Coinbase, Anchorage, and Circle that have been approved to operate in the state by the New York DFS. So great news here. Folks, let me know what you think about this news, especially the Jpmorgan news. That's huge. Again, the world's largest bank adopting, despite Jamie Dimon telling the masses, this is all, garbage, you shouldn't pay attention, yet Jpmorgan is doing all these things. Folks, a great way you can support me in the podcast is by subscribing to my free email newsletter. It's 100% free. Link will be in the description. Check out my book on Amazon. It's available in paperback and digital, and my new course at mycryptocourse.com. This is a comprehensive course that teaches you every aspect of crypto. Folks, thank you for watching and listening. I appreciate you all, and I'll talk to you all later.